As the government says, the economy just grew over 4%. Now, that sounds great, but most people don't feel great. And here's why. The latest GDP release shows real GDP is up 4.3% in quarter three of 2025. The economy can be growing at 4.3% GDP without making life easier for most people. For a long time, we've been taught that if the economy is strong, then people should feel better. But that's not necessarily happening right now. Companies can be doing fairly well, and the numbers can look great. And everyday life at the same time can still feel more expensive, can still feel tight and stressful, right? Now, let me explain to you why this is happening right now. What is GDP? I want to start with this so we're all on the same page. GDP stands for gross domestic product. That's just a fancy way of saying how much stuff a country makes and sells. GDP is the total monetary value of all final goods and services produced within a country's borders during a specific time, serving pretty much as the primary measure of that country's economic size and economic health, indicating either growth, expansion of a country's economy, or contraction of a country's economy. Now, we calculate GDP every quarter, right? GDP, guys, here it is. GDP adds up. What people spend, what businesses invest, what the government spends, what we sell to other countries, it all adds up. Now, here's the important part, and this is where people get confused about GDP. GDP does not measure how easy life feels. GDP does not measure how expensive your groceries are, right? Or it doesn't measure how stressed people feel, right? GDP only measures the movement of money, not our comfort as consumers. So again, the latest GDP report shows the economy, the US economy grew 4.3% this last quarter. That's considered strong growth. On paper, it tells us flat out, people are still spending. Businesses are still operating. The economy is not shrinking. But here's something you need to understand. GDP always looks backwards, folks. It tells us what already happened, not what's about to happen. And that's why we can't just stop the conversation there at the GDP is strong. No, there's more to the story and more to our economy. Now, here's why 4.3% GDP sounds better than it feels, okay? GDP can go up when life feels expensive. Now, why does that happen? Because GDP counts spending. GDP does not count inflation, right? The rate at which prices are going up and rising, or GDP doesn't count or measure consumer sentiment. How we feel about the economy and how we feel as consumers actually matters, because how we feel about the economy ultimately dictates our spending behaviors, right? So GDP doesn't measure that. If prices go up, GDP goes up. If people use credit cards or even default or pay late on their credit cards, GDP still goes up. If rent and insurance rise, GDP still goes up, right? GDP doesn't ask how you paid for it. GDP doesn't care if you're comfortable with your spending or comfortable with what's going on in the economy. GDP only cares that money moved. That's why a strong GDP doesn't always feel like a strong economy. It can be a little misleading. Now, let's connect GDP to the other three numbers that we recently received in the last few weeks, okay? Because this is where the real story is, right? The real story is not in, oh, we have a strong economy because the GDP is strong. No, there's more to it. According to the latest jobs numbers that we got a few weeks ago, the unemployment rate is now up 4.6%. That means most people who want a job, they still have one, but more people are struggling than ever before. Here's the simple way to think about it, right? The job market is still standing, but it's not as strong as it used to be. Companies are not collapsing all around us, right? But companies are also not hiring aggressively at this point. So even with a strong GDP, the job market is still tighter. Now, let's put this strong 4.3% GDP up against inflation. The latest numbers that we got about a week ago showed that core CPE inflation is at 2.6% over the last 12 months. That means prices are still rising. They're just rising slower. Think of inflation like a car, right? It used to go 90 miles an hour. Now the car is just going closer to about 35 miles an hour. The car is still moving. prices are still going up, just not as much as they were, right? And this is important. Prices are not falling. They're just rising slower. We got to understand that. That's why life still feels expensive, because inflation just sort of compounds on top of itself. Connect all of this to what the Federal Reserve just did with interest rates a few weeks ago. The Fed cut interest rates by 1/4 of a percentage point, or 25 basis points, bringing the Fed funds rate down to a range between 3.5% to 3.75%. Now, the Fed usually cuts rates when inflation is under control enough and the economy might need some support, or the economy needs a little bit of boosting. That's the only reason the Fed would cut rates. This rate cut told us something very important, right? It told us that the economy is working, but the economy is not strong enough to be totally left alone by the Fed. The big picture is this, guys. Here's the full story in plain English. GDP is strong. The economy is still moving. Jobs are tighter, right? That means less margin for error. Inflation is sort of easing up. It has been for a while, but prices are staying high. Rates were cut, so the Fed is trying to manage any risk that they see out there in the future. So this is not a boom in the economy just because we have a strong GDP. And at the same time, it's not a crash either, right? It's an economy right now in America that's growing without really delivering relief evenly amongst everyone. So let me ask you this, guys, and I really want you to answer this in the comments below. Does this economy feel strong to you? Or does this economy just feel expensive, right? Just drop one word in the comments below, either strong or expensive, either one. Now, I read these comments, so I want to see how this feels in real life to you, to real people, right? Not just on paper. Now, who benefits first when GDP is strong? Let's talk about it. When GDP is strong, guys, the benefits usually show up first for big companies, because these big companies, they're moving a lot of product. Remember, we said GDP measures the movement of money, right? It also benefits investors, because investors are going to benefit from companies moving a lot of product. A strong GDP also benefits asset owners, again, because market values tend to rise when money moves and the GDP is higher. Also, watch this now, government tax revenue also benefits from a higher GDP. Why? Because higher economic activity generates greater income for individuals and for businesses. And greater income for individuals and businesses result in what? Higher tax payments. So tax revenues go up when the GDP goes up and we got more product moving, right? For most people, the benefits of a strong economy, a strong GDP, shows up later, right? Usually in the form of more jobs or steadier work. But this is why GDP headlines can feel sort of disconnected from real life, because GDP can go up without life getting easier. A high GDP mostly benefits people who already own assets, not people who are just trying to get by, because the people with assets, they benefit from market values increasing when money is moving. And this is why I say all the time on this channel, you got to own assets. Now, let me talk directly to my investors, okay, who are listening to me. Strong GDP growth tells us that the economy still has momentum, right? Let's be real with it. That means this is not the time as an investor to panic. This is not the time as an investor, to sell off everything. And it's definitely not the time as an investor to be chasing hype. What investors should be doing right now in this particular type of economy with a strong GDP, but not so strong consumer sentiment, is first, stay invested. Okay. Listen, strong growth supports businesses over time. So you want to hold on to your ownership in businesses. In other words, keep your assets right now. Okay. Secondly, for my investors, stay diversified. Okay. Not every company is going to benefit equally from the economic growth. So you want to have your allocation, your asset allocation kind of spread a little bit to a few places. Now, thirdly, focus on quality as an investor. If you're investing right now, profitable companies, again, not hype. You want companies with strong balance sheets in your portfolio. These are your long-term leaders in their industry or in their sector, whatever that sector or industry may be. And most importantly for my investors, don't confuse this strong economy or this high GDP with easy investing. Okay, strong growth rewards patience. Strong growth is going to reward your discipline as an investor, and it's going to reward your systems that you have in place when it comes to investing. It's not going to reward being emotional with your investing, okay? Or following hype. So let's bring this thing full circle, right? The big change is this: the economy can be growing fast while everyday life for everyday people stays expensive. That ain't business as usual, okay? Growth in the American economy no longer guarantees your comfort as a consumer or your comfort as an investor, right? Those days are no longer guaranteed. That's the one thing that you don't want to miss. That then they're just not going to tell you that. You're not going to hear that on the 5 o'clock news, right? Here's what actually matters. First, don't chase headlines. GDP is not a buy signal for the average person, right? The average consumer. It's not a panic signal either, obviously, right? But second, you want to focus on your household economy, what we always call your four walls: your income, your expenses, your debt, your emergency fund, right? Because you want to continue to build stability in your own personal financial foundation, not predictions, not fear, not the latest news article that you read on Yahoo Finance, right? Just solid fundamentals for your own four walls. You don't live inside GDP and move according to what GDP is for the quarter, right? You still live inside the confines of your own budget. Now, let me leave you with this, guys. If you want clarity in times like this, not noise, not fear, that's exactly why I wrote this book, Manage Your Way to Millions. It's not about hype. It's about building a system that works whether the economy is growing, whether the economy is slowing down or changing. This book walks you through managing your money with intention and creating stability before growth, right? And building wealth step by step without guessing, okay? You can grab this book over at manageyourwaytomillions.com or over on Amazon. Everything I teach, the framework, the tools, the long-term strategy is also laid out over at smartmoneybro.com. If the economy feels confusing right now, hey guys, that's normal, but your money doesn't have to be confusing. Flat out. If you got value from this video, smash that like button for me and drop me a comment and let me know your thoughts on this good GDP report that we recently got. Do you believe it and think it's accurate, or do you think it's just propaganda? Let me know in the comments. Guys, the best person to take care of the old you is the young you. Until the next video, peace.